Hello everyone, welcome to the video. In the last video I explained you about the concept of updated return. In this video I will explain you about the reasons for filing an updated return by an assessee. As you know, just like filing income tax returns originally, the assessees can file the updated returns, and filing an updated return will definitely help the assessee for the various reasons I have already explained in the previous video. With a purpose of stressing more upon the reasons behind filing an updated return, here we will go with the important points. The number one, the reason for filing an updated return is that the assessee has not filed the return previously. The reason is his income may be less than the exemptable limit, or his negligency regarding filing of income tax returns, or lack of knowledge about filing income tax returns and its importance. So, if the assessee has failed to file his original income tax returns, then first and foremost he can file the updated return upon coming to know about it. The second important reason for filing updated return is that income not reported correctly. This means assessee, as I said in the previous video, by July 31st, as it is the due date for filing the income tax returns, he will feel the burden of filing income tax returns. The pressure will build. So, as he will be forced to file the income tax returns with a limited time, he may commit the mistakes of not disclosing all the incomes. Assessee may have income from different sources, and it is important for him to pool the income from all the resources and all the sources, and listing those incomes and filing it through the ITR is very important. And in that process, if he fails to give the proper information, correct information about the source of his income, then definitely that may be corrected, and a solution for that can be provided with the help of the updated return. Going to the third reason, choosing of the wrong heads of income. So, what happens? An assessee may be in dilemma while providing information about the source of income. Basically, there are 5 heads of incomes: income from salary, income from house property, income from business and profession, capital gains, and income from other sources. Any income earned by the assessee, any kinds of income, will be brought under these 5 respective heads as per the Income Tax Act of 1961. So, if the assessee is doing or going for self-filing of income tax returns, means without taking the help of the experts or chartered accountants or tax practitioners, in that case there are chances of entering or recording the incomes under those heads which are not suitable for such a source of incomes. For example, the income you earn in the case of other sources or income earned from other sources can be sometimes shown as income from salary or income earned from salary. For example, if a salaried employee, if a lecturer or a teacher, if he earns income from say as remuneration for doing the work in other colleges, maybe for examination or for guest lecture or for any other such activities, such incomes cannot be shown as income from salary. Any income from examination remuneration which is received by the assessee must be shown as income from other sources. So, assessee not having proper clarity about this can make that mistake. So, correcting that mistake is possible in the case of updated returns. So, it is viable or better to show the incomes under the respective heads correctly. So, that will help him to calculate the income tax properly. So, when wrong heads are chosen, they can be corrected with the help of the updated returns. Going forward, the next reason is reduction of carried forward losses. So, as per income tax rules, if there are losses under one head, if the assessee fails to deduct those losses from the same head, he can try to deduct those losses with the help of the other heads as per the set off and carry forward rules. If the assessee fails to do it, then he can carry forward the loss to next assessment year. So, what happens when the losses are carried forward to next year? He will have to wait for the next year, and next year he has to have sufficient income in the respective heads or in other heads to set off those losses. So, if the assessee is not in a position to wait till the end of the next assessment year, or if he finds any window where he can reduce that losses by using the options available in the same assessment year, he can definitely try for that with the help of the updated return. And next reason is reduction of unabsorbed depreciation. This is an adjustment actually in income from business and profession. So, when the assessee fails to deduct the depreciation as an expenditure while computing the income from business profits, while computing income or profits from business, then definitely he can try to reduce those losses if at all it is possible. And to do that, if it was not possible in the case of filing income tax returns, I will repeat this again. If an assessee is earning income from business, if he has unabsorbed business depreciation, means losses from depreciation, if it was not deducted while computing the business profits, then if there is a chance of reducing the depreciation owing to an altered calculation, then definitely he can try to do the same with the help of an updated return, because doing so will help him to reduce the business profits. If business profits are reduced, the taxes on business profits will also come down. So, as an assessee, you have to try and you have to search for those ways and means where you can reduce the business profits. And the next one is about reduction of tax credit. So, sometimes assessee will get the tax credit from the income tax department. So, claiming such income tax credits is also possible with the help of an updated return when the cases is under section 115 JB and 115 JC. And sometimes again, if we take the help of experts or tax practitioners, we will be applying the rates of taxes properly in our income tax returns. If we are doing it on our own, there are possibilities our lack of knowledge or our lack of or our negligence may lead to select wrong rates of taxes. But these days, with the help of the technology, with the help of the income tax website what we are using these days for filing income tax returns, the chances are very less. Still, if a person commits mistake by applying wrong rates of taxes, then such application of wrong rates of taxes will result in calculation of wrong taxes as well. That may burden the assessee in terms of increased amount of tax. So, to curtail that or to overcome such problems, update return can be used where correct rates of tax can be applied, and if the tax liability is less, the refund can be taken back from the income tax department, or if the amount of tax liability which you have paid earlier was less, you can increase that and you can make the payment and you can be an honest taxpayer to the government. Well, these are the different reasons behind filing updated income tax returns. With this, I conclude my video regarding updated return and reasons for filing updated income tax returns. Thank you.